Good morning, everyone. I would like to call the meeting to order and acknowledge that we are in Treaty 1 territory, the home and traditional lands of the Anishinaabe, Innu, and Dakota peoples, and in the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. My name is Carrie Linklater. I am your chairperson this morning, and on the panel to my immediate left is Ms. Linda McFadden, and to her left is Mr. Doug Marks. Our recording secretary this morning is Ms. Belen Rojo. We will be hearing applications for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision have been described in each application, and we will limit discussion to those matters. The statements that are made at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be advised that comparison of assessments of properties are not considered evidence of market value by the board. The board is appointed annually by City Council and is independent of it and the City Administration. It makes its decisions on the basis of the evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note that the board's decisions with respect to an application may be appealed to the Manitoba Municipal Board if the matter pertains to assessed value or classification, or to the Court of King's Bench if the matter pertains to the application of exemptions from taxation. Should you wish to appeal, information on how to do so will be included with the board's order. With respect to the hearing process, I will confirm the points of appeal with your property to be addressed with each applicant following the swearing in. We will then have the assessor's testimony followed by questions that the applicant may have, and then the applicant's testimony followed by questions. Each side will have an opportunity to summarize if they wish. Once all of the evidence about an application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all the applications have been heard, and the board will deliberate in private and make its decisions. You will receive the board's decision by registered mail as soon as possible. And as information, all public hearings are live streamed, recorded, and will be part of the public record. And I apologize, I neglected to introduce our city assessor this morning, Mr. Darren Ducharme. We will be hearing items 1 through 9 on our docket this morning. And Ms. Rojo, if you could please affirm the assessor testimony.
Mr. Assessor, please state your full name.
I, Darren Charles.
And do you affirm the evidence provided present this hearing is the truth, nothing but the truth?
I do.
Thank you. Mr. Applicant, please state your full name.
Gary Ralph Reimer.
And do you affirm the evidence provided present that this hearing is the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Good morning, Mr. Reimer and Mr. Ducharme.
Morning.
Morning.
And we will start the hearing with our first property. Can everybody hear me?
I can hear you. Yep.
Okay. It's very loud outside. We will start our first property, 538 Academy Road. And Mr. Ducharme, whenever you're ready.
Thank you. The phone number is 22-1272. The roll number is 120-706-37100. The address is 538 Academy. For the roll year 2023, with a reference date April 1st, 2021, we have an assessed value of $2,234,000. The parcel use is a strip mall. Zoning is C1, and we have a leasable area 6,846 square feet. I do have a recommendation to decrease the 2023 assessed value to $2,054,000.
Mr. Ducharme, can you just give an explanation as for your recommendation?
I decreased the rent on the premise, and I increased the cap.
And the cap too?
Yes.
No. What did you increase it to?
I increased it from 6.20 to 6.5.
Well, thank you.
I can go through the agency.
You know what? I think we're fine. Nobody would like to hear it. All right. Mr. Reimer?
We're in agreement.
All right. And Ms. McFadden, did you have any questions?
I do not.
And
No questions for me, thank you.
thank you, Mr. Marks. We'll move on to our next property, which is 5114 Roblin Boulevard.
Thank you. File number is 22-1830. The roll number is 0100-346-6100. The address is 5114 Roblin Boulevard. For the roll year 2023, with a reference date April 1st, 2021, we have an assessed value of $2,893,000. The parcel use is a strip mall. The zoning is C2. We have a leasable area of 15,956 square feet. I have a recommendation to decrease the value to $2,828,000, and this is an adjustment due to a decrease in the leasable area.
What was that value again, sir?
The revised is $2,828,000.
Did you have any questions, Ms. McFadden? Mr. Marks?
None for me, thank you.
Mr. Ducharme, I just wanted some clarification. You said adjustment to the leasable
Yes.
area. And so you decreased it?
Yes.
And that what was the new number?
The total area is now 15,390 square feet.
Thank you. Mr. Reimer, are you in agreement with this recommendation?
Madam Chair, we're still a wee bit apart, but I appreciate Mr. Ducharme's diligence on it, but I think we should proceed.
All right, thank you. Mr. Ducharme, if you'd like to, thank you.
On page 2, we have a couple aerial views of the subject property, which is located at 5114 Roblin Boulevard at the corner of Barstone Road in the Roblin Park neighborhood. On page 3, the top photo, another aerial view. The middle photo on page 3 is a street view photo of the subject property taken from Roblin Boulevard. And on the bottom is a street view photo of the subject property from Barstone Road. Page 4 is a request for income information. And below that, we have a subject sales history. October 11th, 2016, we have a sale price of $2,150,000. Our records indicate that this was a valid sale between unrelated parties. On page 5, we have our rent comparables. All the comparables are the same parcel use and zoning as the subject. All comparables are located on the same street as the subject and in close proximity to the subject. The mean rent of all the comparables is $14.26 per square foot, which is in support of the model at a $13.80 per square foot blended rent rate. On page 6 is the subject property income summary. So I'll just kind of go through, that's been revised. The revision is to premise ID 223. Where the leasable area is 2,150 square feet. That's been reduced to 1,584 square feet. And this did change the rent from $13.68 per square foot to $13.98 per square foot. The potential rent for that premise changed from $29,412 to $22,144. So the total leasable area changed from 15,956 square feet to 15,390 square feet. And this changed the potential rent from $219,704 to $212,436. And this gives a blended rental rate of $13.80 per square foot. Vacancy loss is 4%. Expenses are at 3%. We have a shortfall at $9 per square foot, giving a net operating income change from 198,845 to 192,281. We've applied a cap rate of 6.80, giving an estimated value change from 2,924,000 to 2,828,000. On page 7 is our capitalization rate chart. Page 8, our Municipal Assessment Act excerpts. Pages 9 through 25 are the 2020 return, income, and expense news. And that would conclude my presentation.
Thank you. Questions, Mr. Reimer?
Thanks, Madam Chair. So, Mr. Ducharme, these are model, notwithstanding the change in the leasable area, and I appreciate you taking the time to do that, but the parameters other than that are all model driven, correct?
Yes.
Okay. Thanks. That's for the purpose of this matter, Madam Chair. That's my only question.
Thank you. Ms. McFadden? I have no question. And Mr. Marks?
None from me as well.
I just have one question, Mr. Ducharme. Did you have a chance to inspect this property?
I did not have
All
a chance for this.
I thank you. Mr. Reimer, if you would like to proceed with your brief.
Thanks, Madam Chair. Could we initially please turn to my main submission on page 13? Just hope to frame the discussion very briefly, and the issues are actually quite narrow in this case. As you can see on page 13, the main difference in the respective valuations relates to the potential annual rent to be applied in this case. The department's got now a slightly lower rate, but it's still significantly higher than our suggested rate of $182,154. We're applying the same vacancy allowance of 4%. Difference, of course, in the non-recoverables, and with your permission, Madam Chair, I'd propose to go through that just once and briefly, and ask that the questions, comments be carried forward. In this case, we are not disputing the cap rate at 6.8%. It's consistent with the indicators in our cap rate study for average quality retail properties. So there's no issue with respect to that. So with respect to the rental rate, the income and that we've calculated, if we might turn back then to page 11. And you can see in the middle of page 11, there's a chart showing the rental rates in effect at subject as of the reference date, with one exception. I did notice this just this morning, actually. If you look at the very last unit, Primerica Financial, they had been in the fairly large unit of 2,150 square feet under a lease that ended in December of 2020. And that's what I had just picked up on this morning. I checked the information subsequent to December 31st of 2020, going into the first part of 2021, just part of the reference date, and the unit's vacant. So they did vacate at the end of that, at the end of their term, I should say. They also, though, and if the board members and Mr. Ducharme might get your pens handy, because that lease, of course, was under a 2002 lease at $7 a foot. And when I looked at all the circumstances here, I'm going to suggest this, because that $7 rate, quite bluntly, strikes me as being low. So on the one hand, we've got the significant vacancy that has arisen just prior to the reference date. So I'm not changing my vacancy allowance, but I am going to suggest that we adjust the rent for that unit to $11.50. And the reason for the $11.50 suggestion, if you look at that same chart just above it, there was a June 19 lease for the unit 5120B at $975. But then you've got two up from that, a 4,200 foot lease for Royal Bank, which is obviously going to be the premium rental rate typically in these kind of strips. And they are here, and they're at $14.50 a foot. And then you've got another March 2019 lease for a smaller space, which is unit 5118 at $14 a foot. So taking into account those indicators very near the reference date, but also factoring in that obviously with 2,000 square feet out of, call it 15,000, they're going to be very motivated not to carry that kind of vacancy for an extended period of time. And so therefore I'm suggesting the rate of $11.50 a square foot. The effect of that then, and this is, if you might make a note, the revised potential annual rent that I'm suggesting is $191,721. And then running that through with the 4% vacancy and the remaining parameters as we set forth in our brief, which includes the $9 shortfall rate, the full 5% for the non-recoverables, and the 2% for what's historically been known as the other or structural reserve. The revised net operating income is $165,628. And capitalized at 6.8%, we come in at a revised suggested value this morning of $2,436,000. So if you might consider that my request in lieu of what I had put in our brief because of the investigations that I had done actually earlier today on that former Primerica unit. So at $2,436,000, that certainly, I believe, also is very consistent with the purchase that Mr. Ducharme referenced in late 2016 at $2,150,000. So I am allowing, notwithstanding the effects of the pandemic, I am allowing for some notional increase in the value, but we believe certainly that is consistent with those considerations. So then, with those rental rates in mind, the average rent then for the entire property becomes $12.46 a square foot. And suggest the board consider that in their deliberations. With respect to then the non-recoverables, Madam Chair, if I might ask the board members, Mr. Ducharme, to pull up the non-recoverable study and let me know when you've got it.
Mr. Reimer?
Yes.
I'm just wondering if you would consider that the panel members heard from you regarding this matter yesterday afternoon?
I am if with the board's permission, I'll tell you what, you need not even pull it up. I'll just bring a couple of brief comments to highlight the suggestion. We've taken the position that the non-recoverables have always intended to be a stabilized allowance for the truly non-recoverable expenses, which are, in our analysis, leasing commissions, advertising, marketing, and professional fees, with some limited exceptions for asset management fees. This is consistent with both the appraisal theory that we had presented in these materials and with the assessor's assessment department's former manuals, as well as some assessment materials for other provinces, specifically Saskatchewan and Ontario. In our analysis, based on the 4 and 5 year stabilized averages, we come in at just, it's actually right around 6% for a mean and median. So we believe the 5% is appropriate. And if you recall, Madam Chair, the Altus capitalization rate analysis is based upon the application of the full 5%, and the mathematical effect of reducing it to 1% is between a 31 and 33 basis point increase in the cap rate. So if the board decides that the non-recoverable allowance would be more appropriately set at 1%, then for a total non-recoverable expense of 3%, including the other expense item, then we'd request that our capitalization rate request be increased by 25 basis points. So with all that being said, then I will leave it at that, because yes, indeed, Madam Chair, I understand that all panel members and Mr. Ducharme are well aware of the study, and I'll leave it for your consideration. Thank you.
Thank you very kindly, Mr. Reimer.
And so that would conclude my presentation with the revised suggested value of $2,436,000. Thank you.
Thank you. Mr. Ducharme, did you have any questions?
I do. I was on page 13 of the applicant's brief. He did address one. I did notice the 2 rental rates at the bottom that were quite low. You addressed the one at $7.05. The one unit that has a net market rent of $9.75. Now, I was just wondering how that was determined. If we look, believe it's on page 30, the rentals. I believe that one is 1875.
Yes, good point, Mr. Ducharme, but that's a gross rent. That's a very good point. But there are no recoveries from that tenant. And after deduction, the deduction of the gross lease costs, which in this case are, and I can, if we look to page, let's find the income statement. So it starts at page 27 and continues through to page 28. So the total expenses, now mind you, and I'm just going to slip away from the camera here for a second to get my calculator. What we'd have to do, if you look on the second page of the income statement, the expenses would need to be adjusted actually for leasing commissions and professional fees, because as I say, we're including that in our stabilized 5%. So the total expenses for the property are 126,925, call it. We take out the leasing commissions, 7703. We take out the professional fees of 2,000. And that then leaves expenses of 117,222 divided by the leasable area, as we now both have it, of 15,390. That is a that's a indicated expense of 762. And you're right, Mr. Ducharme, those numbers don't add up. So I'm going to adjust that again, because you are exactly right. The expenses that were applied to that gross rent were too high. So let's take the 1875 and deduct the gross lease expenses. So that puts it at 1113, and you're exactly right, Mr. Ducharme. So I'm going to ask the board members and Mr. Ducharme to please pick up your pens again. The revised, adjusting that gross rent to a net based on the methodology I just described. So the net rent for the Dreger space is then $6,411, which is a net rental rate of 1113. And when the revised potential income is 192,516. And this isn't going to have a material effect, but Mr. Ducharme's bang on. So this is an adjustment that should be made. So the potential income is 192,516 with using the very same parameters I just described. The revised NOI is 166,338, and capped at 6.8%. The income indicated valuation would be 2,446,000.
No further questions.
Thank you. Ms. McFadden? I have no questions. Thank you. Mr. Marks?
And I have no questions.
I also have no questions. Do either of you wish for a summation on this property?
No, thank you.
Thank you both. We will then move on to 1800 Gordon Avenue. Whenever you wish to proceed, Mr. Ducharme.
Thank you. This file number is 22-2634. The roll number is 120-976-49600. The address is 1800 Corridon. For the roll year 2023, with a reference date April 1st, 2021, we have an assessed value of $1,894,000. The parcel use is strip mall, zoning C1. We have a leasable area of 5,394 square feet. I do have a recommendation to decrease the 2023 assessed value to $1,712,000, and this is an increase to the cap rate. Oh, I should mention from 5.65 to 6.25.
Mr. Reimer, are you accepting of this recommendation?
We're so close, Madam Chair, but not quite. Just a couple of limited points.
Thank you.
On page 2, we have a couple of aerial photos of the subject property, which is located at 1800 Gordon between Centennial and Carpathia Road in the J.B. Mitchell neighborhood. Page 3 at the top is another aerial photo of the subject property. The middle and bottom, we have a couple of street view photos of the subject property in Gordon. The improvements for this property were completed in 2012. Page 4, we have request for income information. We do have a subject sales history of October 7th, 2019, with a sale price of $1,680,000. Our records indicate that this was a valid sale between unrelated parties. On page 5, we have our rent comparables. The comparables are the same parcel use and zoning as the subject. All the comparables are in close proximity to the subject, within 2 kilometers of the subject. On page 6 is the subject property income summary. We have a total leasable area of 5,394 square feet, giving a potential rent of $116,995. We have a vacancy loss of 4%, expenses at 3%, a shortfall at $9 per square foot, giving a net operating income of $107,004. We changed the cap rate from 5.65 to 6.25, and this gives an estimated value change from $1,894,000 to $1,712,000. We just felt that was that cap rate was just too aggressive, and that's why it was changed. On page 7, we have our cap rate chart. As you can see, the 5.65 rates the model did apply is below the low end for all reports for the retails reports for strip malls. Page 8, we have the Municipal Assessment Act excerpts. Pages 9 through 20 are the return 2020 income and expense mailer information that was returned for the subject property. And that would conclude my presentation. Thank you.
Thank you. Mr. Ryder, questions?
Thanks, Madam Chair. So again, Mr. Ducharme, thanks for your diligence on this. Other than the amendment to the cap rate, the remaining parameters shown on your page 6 are all model driven, correct?
Yes.
Thank you. Madam Chair, that's my only question.
Thank you. Ms. McFadden? I don't have any further questions. Mr. Marks?
No questions this time, thank you.
Mr. Ducharme, you increased the cap rate on this property? And was that done by you?
Yes.
Okay, thank you. And I'm assuming you didn't have a chance to inspect this property.
I did not have a chance to inspect.
So then I'm going to assume you did not inspect any properties on the docket this morning?
Correct.
All right, thank you.
For this hearing, yes.
Yes, thank you. Mr. Reimer, if you'd like to proceed.
Thanks, Madam Chair. So the issues have been, have been narrowed. If we might turn again to my page 13, please. So fundamentally, Madam Chair, if you recall, and we had the same evidence in our brief concerning the sale price. So in October of 2019, the property traded at $1,680,000. Our understanding is the same as Mr. Ducharme's, that this was an open market arm's length transaction. The difference, though, is that, and again, appreciate Mr. Ducharme's suggestion in this case, but the difference, I think, in perspective of the department and ourselves is that the October 19 purchase was, of course, prior to the pandemic, and we would expect certainly that in the conditions of the pandemic for these retail properties, that the values would certainly not have increased from October of 19. We're not asking or looking for substantial reductions from that purchase price, but certainly we're suggesting that the value between October 19 and April of 21 was everything that happened starting in March of 2020. would lead to the conclusion that if an investor were looking at it in April of 21, that would have the previous price certainly would be at a level that's probably not what they would be considering in the circumstances they found themselves on that date. On page 13, though, with the suggestion by Mr. Ducharme, we're now down to two very minor points. The department's got a modeled rent of $116,995. We're suggesting $112,940, as you see there. Those rents, and I'll go back to it in a second, you need not turn the page now, but they are based on the rents in place negotiated very, very near the reference date in two of the three cases. And running it through, the other difference, of course, now is the 5% non-recoverable. So that then leads to a suggestion this morning, I should say, to a revised value of $1,565,000. If I could ask the board members and Mr. Ducharme then to turn to page 11 briefly. And this is the page that describes how we got to the potential income we did, and it's got some lease comparables as well. The lease comparable range that we've set out on page 11 is generally consistent with the departments. The range is very similar, and what's actually happening at the property, as you can see in the chart in the middle of page 11, there's three tenants at this site, one with a lease negotiated in November of 19. That lease, I would suggest, was very much tied into the assumptions made by the purchaser when they bought the property, given the start date being right around the time of the purchase. Again, all pre-pandemic. So November 19 at $20, and the other two leases, a March 18 lease at $20 and a July 19 lease at $22. So in that $20 to $22 range, and that's what we've applied in our valuation. Certainly, we believe those would be the best indicators. If anything, if there's any sort of notional change in the rental rates during the pandemic, Madam Chair, if you might recall from our previous submissions in our capitalization rate studies, we did have an opportunity to talk to sophisticated real estate investors. And one of the things they certainly mentioned with the retail sector is that they expected rental rates, if anything, to be slipping because of the effects of the pandemic. So we're using those rates. We believe they're fair. It does lead to that very minor difference in rents of about, call it $4,000. And then it distills after that down to the non-recoverable expense allowance. So with all that said, the requested value this morning is $1,565,000. Thank you.
Hi, thank you. Mr. Ducharme, questions?
I do not.
Thank you. Ms. McCutcheon? I do not have questions. Mr. Marks?
And no questions for me at this time, thank you.
Also have no questions. Do either of you have a wish for a submission on the property?
No, thank you.
We will move on then to 528 Waterloo Street. And Mr. Ducharme, whenever you would like to proceed.
Thank you. We have file number 22-3010. Roll number is 120-507-40000. The address is 528 Waterloo Street. For the roll year 2023, with a reference date of April 1st, 2021, we have an assessed value of $1,969,000. The parcel use is a strip mall. The zoning is C1. The leasable area is 6,929 square feet. I do have a recommendation to decrease the assessed value to $1,786,000. And this is a result of an area decrease and a cap increase. Area decrease from 6,929 square feet to 6,769 square feet. So this was confirmed via the most recent permits for that property. And the cap rate changed from 6.25 to 6.75.
Could you repeat the value again?
The cap rate?
No, the value.
Oh, the value, yes. The new value is $1,786,000 round.
Mr. Reimer, are you accepting of this recommendation?
Madam Chair, could I have perhaps half a minute?
Yes.
Thank you. We'd still like to proceed, but again, we've narrowed the issues considerably. Thank you.
Yes, proceed, Mr. Bouchard. Thank you.
On page 2 are a couple area views of the subject property located at 528 Waterloo, which is on the corner of Corridon in the Central River Heights neighborhood. Page 3, the top photo is an aerial view of the subject property. The middle photo is a street view photo of the subject property from Waterloo. And the bottom photo is a street view photo of the subject property from Corridon. On page 4 are the requests for income information. And below that is the subject sales history, which sold November 20th, 2013, being the most recent sale for $1,640,000, which you'll notice higher than the applicant's request. Our records indicate that this is a valid sale between unrelated parties. On page 5, we have our rent comparables. All comparables are the same parcel use and zoning as the subject. The comparables are in close proximity to the subject, within 2 kilometers. The mean net rent of the comparables is $21.28 per square foot, which is in support of our model's blended rent rate of $19.51 per square foot. On page 6 is the subject property market income, which has been revised. The change was to premise ID 23619. The leasable area we're changing from 2,590 square feet to 2,430 square feet. Again, this was confirmed via the most recent permits. The rent changes from $18.49 per square foot to $18.57 per square foot. And then the potential rent changes for that premise from $47,889 to $45,125. So the total area changes from 6,929 square feet to 6,769 square feet, which changes the potential rent from $134,808 to $132,044. The vacancy remains the same, 4%. Expenses remain the same at 3%. The shortfall remains the same at $9 per square foot. The net operating income has changed from $123,040 to $120,522. We've adjusted the cap rate from 6.25 to 6.75. And this changes the estimated value from $1,969,000 to $1,786,000 rounded. On page 7, we have our capitalization rate chart. And you'll note the 6.75 applied to the subject property is at or near the upper limits for strip malls for this property for all reports. On page 8 are the Municipal Assessment Act excerpts. And pages 9 through 20 are the 2020 income and expense mailers that have been returned. And that would conclude my presentation. Thank you.
Thank you. So, Mr. Reimer, questions?
Mr. Ducharme, so again, other than the adjustment to the cap rate, the remaining parameters from rent through to the expenses were model driven, correct?
Yes, that's correct.
Could you give me that revised potential annual rent one more time? I took that one down wrong.
I have a revised potential rent of $132,044.
Okay, thank you. Thanks, Madam Chair. Those are my questions.
Thank you. Ms. McFadden? I have no further questions. Mr. Marks?
And no questions from me, thank you.
I also have no questions. Mr. Reimer, would you like to proceed with your brief?
Thanks, Madam Chair. If we could turn to page 13 then. So again, we've narrowed the issues considerably here, and it now comes down to 2 points. One being the non-recoverables that we've discussed, the other being the potential rent. So Mr. Ducharme's revised suggested rent is $132,044. We're still roughly $16,000 lower than that. We're suggesting $116,352. If we turn back to page 11, you can see in the chart to the middle of the page with the calculation of that total potential rent, and it includes, Madam Chair, the two 2018 leases at $17 for the first unit, $17.05, and then a May 18 lease at $18.03. Certainly, we suggest those provide very good indicators, and there's a rental chart at the bottom of page 11 indicating that the rates being achieved at this site are certainly consistent with market. So with that then said, we're asking for a revised assessment as shown on page 13 using the same 675 cap rate of $1,503,000. I did want to comment briefly, and I will be obviously very transparent and very forthright about it. We are indeed looking for a value that's less than the purchase price, Madam Chair. I certainly am taking the position, you've heard me talk about this at length, that in the circumstances of the pandemic and the risk profile for a number of sectors, the hospitality industry being hit the worst, but retail properties certainly, and retail strips with these non-chain tenancies represented a very, very much elevated risk. And certainly, while I can appreciate Mr. Ducharme's comments relative to the purchase price well prior to the pandemic, I am suggesting in no uncertain terms that in the context of the pandemic with these types of properties, and given that the rental rates and the indicators being achieved within the property, that the value of $1,503,000 stands to reason in that context. I've heard for many years, and I understand why it's the assumption is there. Certainly, the impression I have from the department in many respects is that values tend to increase. They're sort of in a reasonably linear pattern. That pattern, I'd suggest very clearly, was utterly disrupted by the pandemic, and that's obviously a set of circumstances we've never experienced before. Hopefully, coming through this now, we never have to deal with it in that same manner again. But certainly, that would impact the valuation as it does in this case. Thanks, Madam Chair.
All right, thank you. Mr. Ducharme, questions?
I have no questions.
I have no questions.
I have no questions from me, thank you.
So, Mr. Reimer, just one quick question on what you had just stated about the effects of the pandemic. Do you have any sort of further evidence to support that comment?
I do. Would we like to go into the capitalization rate study? Because that's where it is. I was assuming because it was agreed, I didn't get into it, Madam Chair, but I am happy to highlight the things I'm talking about. If you would like to do it. And again, to be fair, we can do it once if you'd wish to do so. But if you read, it's in the capitalization rate study. How about I give you that reference, the comments I'm talking about?
I thank you for that, yes.
Sorry, Madam Chair, was that let's get into the cap rate study, or we'll leave it as a reference?
As a reference.
Okay, thank you.
Sorry?
5-minute break?
Yes, we'll just finish this.
Okay.
Mr. Ducharme, did you have any questions for Mr. Reimer?
No.
Ms. McFadden? No question. Mr. Marks?
No questions, thank you.
Pardon me, you threw me off this morning. Do either of you have a wish for summation on this property?
No, thank you.
And at this time, we will just take a very quick 5-minute break.
Thank you.
I would like to call this meeting back to order, and we are going to move on to 14 Britannica Road. Mr. Ducharme, whenever you'd like to proceed.
Thank you. File number is 22-2522. The roll number is 0800-591-3500. The address is 14 Britannica Road for the roll year 2023 with a reference date April 1st, 2021. We have an assessed value $2,680,000. The parcel use is a strip mall. Zoning is C2. We have a leasable area of 10,860 square feet. And recommendation is to decrease the 2023 assessed value to $561,000. This was due to an increase in the cap from 6.40 to 6.50.
Thank you. Mr. Reimer?
Again, it narrows the issues considerably. Not quite there if we might proceed, but cap rate will not be in dispute. I can advise now, based on the 6.5 recommendation.
On page 2, we have a couple of aerial photos of the subject property, 14 Britannica Road at the corner of St. Mary's, and it's located in the River Park South neighborhood. Britannica Road is a main artery into River Park South. On page 3, at the top, we have an aerial photo of the subject. The middle photo is a street view photo of the subject from Britannica, and the bottom is a street view photo of the subject taken from St. Mary's Road. Page 4 are the requests for income information. And below that is the subject sales history, the most recent being December 12, 2014. The property sold for a sale price of $2,275,000. Our sales questionnaire received back from the current owner states an arm's length sale, and the purchasers adopted the company name. On page 5, we have our rent comparables for the subject property. All comparables have the same parcel use and zoning as the subject. All comparables are in close proximity to the subject. Many are on St. Mary's Road, to which the subject has access from. Most of the comparables have an effective year built similar to the subject. The mean rent rate for all comparables is $19.31 per square foot, which is in support of the model, which is applying a blended rental rate of $17.48 per square foot. On page 6 is the subject property income revised summary, or income summary that's being revised. The leasable area remains the same at 10,860 square feet, giving a potential rent of $189,865. We have a vacancy loss 4%, expenses at 3%, a shortfall at $9 per square foot. This gives a net operating income of $172,892. We've revised the cap rate from 6.40 to 6.75%, giving an estimated value change from $2,701,000 to $2,561,000 rounding. Page 7 is our capitalization rate chart. Page 8, the Municipal Assessment Act excerpts. And pages 9 through 20, we have the 2020 income and expense mailers, which were returned. And that would conclude my presentation. Thank you.
Thank you.
What was your final number again?
The final estimated value is $2,561,000 rounded.
Questions, Mr. Reimer?
Thanks, Madam Chair. So again, the initial question, Mr. Ducharme, on your page 6. So other than the capitalization rate adjustment, the remaining parameters are model-driven parameters, correct?
That's correct.
Okay, could we, on your page 6, are you familiar, and Mr. Ducharme, I'm going to be very fair to you because I know this isn't something you've been doing for many, many years. Are you familiar with the term elbow space? And if you're not, that's okay.
Well, I mean, I understand. I think I understand what you're saying. Yeah.
Oh, okay. So if we look on your page 6 at premise ID, it's about the middle of the premises, the 2,160 square foot unit, premise ID 7510. Were you aware that that is elbow space?
No, I wouldn't be aware that one is elbow.
Okay. I didn't think that was the case. And so do you know, and if you don't know, that's fine because I know you're not the modeler, but do you know if the department in its modeling process accounts for elbow space as opposed to standard retail space with full storefront? I'm
not familiar specifically, but I did note, I mean, their reported rental rates are higher than the model for that one, I believe.
No, I'd suggest actually they're not. It was vacant as of the reference date, and the prior lease was at $10. But I'll talk about that in a second.
We have at $20 on my notes here per square foot. Model 6.
The $20 rate, Mr. Ducharme, would be news to me for what was happening as of the reference date. I believe it was vacant.
Might be mistaken, but that's the note I have.
Yeah, fair enough. So, and of course, the model parameter for vacancy at 4%, that then does not account for the fact that roughly 20% of the space was vacant from the end of 2019 or fall of 2019 right through to the reference date. No adjustments been made to account for that vacancy, correct?
There are no adjustments for vacancy, correct?
Okay. Thanks, Madam Chair. Those are my questions.
I thank you. Ms. McFadden?
Not really a question. I just note that on the last couple, the number on your front page is different than the number on your total value number. So do we assume the one on the front page is the correct one? I think this one was on page 1, it's 2,680,000, and on page the later one, I can't see my number anyway, but it's different. On your work,
On page 6.
Page 6,
Yeah.
the previous. Sorry.
I don't know if it was an adjustment that was approved because of the cap rates.
Yeah.
Yeah, I don't know what it's. That's one of these calculations on the sheet that would be $2.
Doesn't really matter. I just.
Yeah, I sorry, I didn't notice.
Yeah, sorry.
Any further questions?
No.
Mr. Marks?
No, I picked up the same thing. Thank you.
I also have no questions. Mr. Reimer?
But just to clarify, Mr. Ducharme, notwithstanding the slightly different values shown on there, the recommendation based on the revised cap rate and the adjustments you've made is $2,561,000, correct? I want to make sure I have that correct.
That's correct.
Okay, thank you. Madam Chair, again, with Mr. Ducharme's suggestion, our issues have narrowed again. If we could turn to page 14 in this case, please. And if I might ask the board members and Mr. Ducharme to make this change. I'm in agreement with the adjustment to the 6.5% cap rate. And so my submission, as you can see on page 14, was suggested a rate of 6.75. I'm comfortable with the 6.5% rate. And so using the precisely same valuation parameters and the same NOI of 142,082 capped at 6.5%, the indicated value is $2,186,000. So if you might consider that my request this morning at $2,186,000. I believe that Mr. Ducharme's suggestion at the 6.5 is very fair. So this then comes down again to non-recoverables. We've talked about that, but also in this case, vacancy and the rental issue. If you look at our potential rent, Madam Chair, at the top of page 14, it's $173,685. Again, I won't go through it, but I've provided a chart with rent comparables to confirm that they're within market, and I'd suggest they are. The difference, though, the entire difference pretty much between my potential rent and the department's modeled rent relates to that elbow space I referred to. It's unit 14. It was classical music, 2,367 square feet. That's the unit that went and I'll get my dates right here. Classical Music actually vacated in June of 2019. So throughout the latter half of 2019, all through 2020 and through the reference date, that unit was entirely vacant. While it represents roughly 20% of the space, we are not suggesting a chronic vacancy allowance that is substantially elevated. And the reason for that is we're treating it as, it is the elbow unit. We're treating it as elbow space with a market rent of only $10 based on what Classical Music had been paying. And with that lower rental rate relative to the remainder of the standard CRU units with full storefronts, it wouldn't be, in my view, appropriate to both ask for the lower rental rate and a very, very elevated vacancy allowance. So notwithstanding that it represents, as I say, 20% of the space, the vacancy allowance we're suggesting is 7.5%. That is based upon taking the sort of the benchmark, I should say, from the rents that we've attributed to that space, along with the standard 4% vacancy allowance. So with all that, we're suggesting the revised potential income of $173,685, accounting for the elbow space, the vacancy allowance of 7.5%, and a revised cap rate of 6.5 to come in at $2,186,000. I guess I'd suggest in the alternative, if one's going to treat this space, notwithstanding and sorry, I'm going to take a half step back. I've been working this property for many, many years. Pardon me. I am very aware of the historical issues involved with securing tenants for this space and keeping it full. And so when Classical Music, who had been there for a while, when they finally vacated, that then certainly represents a return to some of the same historical difficulties. If one were to ascribe a market rent closer to the modeled rate of $17.99, then I would very much suggest one would have to absolutely increase the vacancy allowance, because then you're treating the unit as a standard retail unit that had been fully vacant for nearly 2 years as of the reference date. So I'm choosing to treat it in a different manner with the lower rental rate and the much lower vacancy. But in the alternative, if the board were to apply the higher modeled rent, then the vacancy allowance would certainly be closer to 12.5% in that scenario, representing the true vacancy based on the square footage. Thank you very much.
Thank you, Mr. Hunter. Mr. Ducharme, questions?
No questions. Thank you.
To just clarify with the assessor, the verbal recommendation for cap rate was
I did make a recommendation for 6.75.
6.75. Thank you.
Oh, I apologize. I'm applying 6.5, Madam Chair.
That's all my question.
My question after the certificate.
My question also. Do either of you have a wish for a summation on this property?
No, thank you.
We'll move on to 492 St. Anne's Road. Mr. Ducharme, whenever you'd like to proceed.
The file number is 22-1744. The roll number is 0800-324-3700 for the roll year 2023 with a reference date April 1st, 2021. We have an assessed value of $2,016,000. The parcel uses strip mall. The zoning is C2 and a leasable area of 11,093 square feet. I do have a recommendation to reduce the 2023 assessed value to $1,613,000. And this is a result of removing the value of the adjacent lot that's next to the property, as well as a decrease in rent for one particular premise and a slight increase and an increase in the cap as well.
So can you repeat that value?
Yes, $1,613,000.
Thank you.
The adjacent lot is assessed at $255,000. Can go through.
And your new cap rate?
The new cap rate from 6.55 to 6.75.
And I'm just, Mr. Ducharme, you said decreasing
I
rental
decreased,
rate on,
yes, on one particular premise. The premise is 7817. I reduced that premise rent rate from $17.85 per square foot to $12.89 per square foot.
I'm just gonna ask why.
That rental rate was, is just too aggressive. The comparables do not support that rental rate. It just stands out.
Thank you. Mr. Reimer?
Madam Chair, I don't have instructions, but I'm very comfortable with Mr. Ducharme's suggestion at 1,613,000. Thank you.
Thank you, Mr. Reimer. Ms. Barland, did you have any questions in regards to this?
I have no question.
And Mr. Marks?
None for me, thank you.
I also have no question. Thank you, Mr. Ducharme. And thank you, Mr. Reimer.
Sorry, I do have one quick question.
Oh,
Sorry.
good.
Just to clarify what the value was before you took the parking lot off.
It was $2,016,000.
Okay.
And the parking lot we have assessed at $255,000.
Okay, thank you.
We will then move on to 136 Lennox Avenue. Whenever you're ready to proceed, Mr. Ducharme.
Thank you. The file number is 22-901. The roll number is 080-022-90000. The address is 136 Lennox Avenue. For the roll year 2023, with reference date April 1st, 2021, we have an assessed value of $2,370,000. The parcel use is strip mall. Zoning is C2. The leasable area is 12,897 square feet. And our recommendation is to maintain the 2023 assessed value. On page 2, we have a couple aerial views of the subject property, which is located at 136 Lennox at the corner of St. Anne's Road. Page 3, we have a few street view photos of the subject property. The top is a photo of the entrance from Lennox. The middle and bottom are photos facing St. Anne's Road. Page 4 are the requests for income information. Below that, the subject sales history, no recent sales history for the subject. Page 5, we have our rent comparables. All the comparables have the same parcel use and zoning as the subject. All the comparables are in close proximity to the subject, with several located on the same street as the subject. Several of the comparables have improvements of a similar vintage to the subject. And the mean rent per square foot for the comparables is $15.42 per square foot, which is in support of the model rent at $14.79 per square foot blended. Page 6 is the subject property income summary. We have a total leasable area of 12,897 square feet, giving a potential rent of $190,742. We have a vacancy loss of 4%, expenses at 3%, a shortfall at $9 per square foot, giving a net operating income of $172,976. We have a cap rate of 7.30, giving an estimated value $2,370,000 rounded. Page 7 is our capitalization rate chart. You'll note that the cap rate of 7.30 that we've applied to the subject property is at or above the high end for the strip properties for retail for all reports. Page 8, the Municipal Assessment Act excerpt. And page 9 through 17 are the 2020 income and expense mailers which have been returned. Thank you. That concludes my presentation.
Okay, thank you. Mr. Reimer, questions?
Thanks, Madam Chair. So, Mr. Ducharme, on your page 6, then these are, pardon me, these are entirely model-driven parameters, correct?
That's correct.
Okay. Can we turn briefly, and you may not have an answer for this, but on your page 1, and I've not seen this before, you've got an actual year built of 1976 and an effective year built of 1970.
Yeah, I know.
Is that a typo, or like I've never seen an effective age unless it's obviously gone to waste? But I guess my question is, Mr. Ducharme, are you aware of what happened there, or why that difference might arise?
It's obviously, I would say, an administrative error that needs to be correct. I did see, and I didn't change it for this hearing with the value.
Okay, so we can assume, though, I'm guessing, Mr. Ducharme, we could agree that we should assume the 1976 age for both the age of the building and the effective age, correct?
Yeah, I double checked our records. Our field forms go back to 1976. Is that correct? You're built, yes.
Okay. And we can agree the land to building ratio is very low at 1.95 in this case, as you indicate on page 1, correct?
That'd be low, yes.
Yeah. Madam Chair, those are my questions. Thank you.
I don't have any further questions.
Mr. Marks?
Just one, the cap rate, that was model driven as well?
That's model driven, correct.
Okay, thank you. No further questions.
In regards to the cap rate, Mr. Ducharme, you did not make an adjustment.
No, we felt this was fair, being above the our reports for retail or strip mall is above the high end.
Right.
For all of these, and it is considering the age of the property, as well as the applicant mentioned the parking is tight in this location.
Do you know when this property was last inspected? I'm just thinking about the age, 1976.
We have no recent inspections, nothing within the last few years.
Right, thank you. Mr. Reimer, if you would like to proceed with your brief.
Thanks, Madam Chair. Could we turn to page 14, please? And as you can see in this case, the issues again are actually, there's a number of differences, but they're all on the relatively small side. The department's model driven went to 190,742. We're at 186,405. So we are actually only within a $4,000 difference of each other. Our rates in turn are based upon the rents achieved in the property being achieved as of the reference date, which, and you need not go back to it, but if you can make a reference, page 11 is the details of the leases in place. There are a few indicators in 2019 and 2018 ranging from $13 up to $15. So certainly that's consistent, being very near the reference date with the total market rent applied. And there's also a chart for the board's reference on page 12 where we looked at the market as well to determine and conclude, as we have, that the rental rates are consistent with other market indicators. So at 186,405, vacancy rate's the same. The market vacancy we've applied is 4%, non-recoverables, of course. And the difference in cap rate, though, is 7.5. Now, Madam Chair, I recognize everyone at the hearing this morning, both Mr. Ducharme and the panel members, knowing that you're very familiar with the retail cap rate. Again, I'm happy to go into it, but for the sake of brevity, I'm just going to state the conclusion as to how we're suggesting the 7.5 rate. If you turn back very briefly to page 13, I welcome, again, I welcome the board's questions on the cap rate study that has been filed in support of these submissions. The conclusions we came to for what we're considering to be lower quality retail properties, a range of between 7.5% and 8%, assuming the full application of the full 5% non-recoverable. We've applied a rate of 7.50% in this case at the lower end of that indicator range for these, and we are admittedly considering this a lower quality based on the age and the and the very low land to building ratio, the land to building ratio of less than 2 for retail operations, just quite bluntly, in our respectful opinion, is obsolete. It creates significant parking issues, and certainly is a negative factor. And so, with that in mind, the property, as far as the tenancies, there weren't substantial vacancies. The covenants, for the most part, were reasonable, and so the 7.5% we believe was appropriate. There were a couple of leases of only 2 or 3 year terms, but for the majority of the leases, they were on your typical, you'd expect 5-year terms. So there was some slippage in some of the covenants, but we believe the 7.5%, taking all of these factors into account, is appropriate. That then leads us, as you can see on page 14, to a requested value of $2,157,000. Thank you.
Thank you, Mr. Reimer. Questions, Mr. Duchamp?
No questions.
I have no
Questions from me, thank you.
Just one question, Mr. Reimer. Did you happen to inspect this property?
I have not been inside it. I've driven by it many times, but I have not inspected the interiors of the units, no.
Thank you. Do either of you have a wish for a summation on this property?
No, thank you.
We'll then proceed to 230 Marion Street.
Madam Chair, I think that was the subject of a 15-1. Ms. Rojo, did you get that 15-1?
Sorry, 1 second.
It is on our docket, Mr. Reimer.
Okay, I'm certainly happy to email the 15-1.
You are correct. It is withdrawn from our docket, which I failed to update for us this morning. My apologies.
All right, that item is withdrawn. We will then proceed to 313 St. Anne's Road.
File numbers 22-2257. We have a roll number 080-024-52000. The address is 313 St. Anne's Road. For the roll year 2023, with a reference date of April 1st, 2021, we have an assessed value of $2,214,000. The parcel use is a strip mall. The zoning is C2. The leasable area is 10,222 square feet. A recommendation to decrease the 2023 assessed value to $2,017,000. And this was a result of a cap change from 6.65 to 7.30. The assessed value is now $2,017,000 as a result of a cap change from 6.65 to 7.30.
And Mr. Reimer?
Madam Chair, if I might have a moment. We are certainly closer. We'd still like to proceed. Thank you.
Thank you. Mr. Duchamp?
Page 2, we have a couple aerial photos of the subject property. On page 3, we have a few street view photos of the subject property along St. Anne's Road. On page 4, we have the request for income information and the subject sales history. On page 5, we have our subject property rent comparables. All comparables have the same parcel use and zoning as the subject. All comparables are in close proximity to the subject. The mean net rent of all comparables is $15.92 per square foot, which is in support of the model rate of $15.86 per square foot blended. On page 6 is the subject property income summary, which has been revised. We have a total leasable area of 10,222 22 square feet, giving a potential rent of $162,090. We have 4% vacancy, 3% expenses, a $9 per square foot shortfall, giving a net operating income of $147,258. We changed the cap rate from 6.65 to 7.30, and this has changed the estimated value from $2,214,000 to $2,017,000 rounded. On page 7 is our capitalization rate chart. Page 8, our municipal assessment excerpts, and pages 9 through 19 are the 2020 return income and expense mailers. And that will conclude my presentation.
Thank you. Ryder, questions?
And again, thanks, Mr. Ducharme, for your diligence with respect to the cap rate adjustment that you made, and the remainder of the parameters are all model driven, correct?
That's correct.
That's my only question, Madam Chair. Thank you.
Thank you. Ms. McFadden, I don't have any questions. Thank you. Mr. Marks?
And I have no questions. Thank you.
I also have no questions. Mr. Ryder, if you would like to proceed.
Thanks, Madam Chair. Could I ask the board members and Mr. Ducharme to turn to our page 14? And here's what I'm going to suggest. If one might change our request with Mr. Ducharme's recommendation to the cap rate of 7.3%, I am comfortable with that in this case. So if you could amend the request from 7.50% suggested cap to 7.30%, the revised request then becomes $1,665,000, and it's based upon the parameters as shown there, non-recoverables being at issue. The rental rates are the significant difference. We're suggesting a market total potential annual rent of $140,250. That is significantly different than the modeled rent. Madam Chair, in this case, if we might turn just very briefly to page 11, please. As you can see on page 11, that's how we're getting at the $140,250, and there is also the first two leases. One was negotiated in January of 19 at $15. The other in July of 2020, roughly, I guess that would be 8 or 9 months prior to the reference date at $13. So certainly the very strong indicators within the property near the reference date would support the overall rate we're suggesting. And on page 12, there's again, the rental rates being achieved are consistent with the market indicators for comparable properties in the area. So then returning to page 14, the requested revised valuation that I'm presenting this morning is $1,665,000 based on the application of $140,250 and the potential rent. The remaining parameters is shown there. Thank you very much. Sorry, the remaining parameters as shown with the exception of the cap rate at 7.3%.
Thank you. Mr. Ducharme, questions?
I do not have any questions. Thank you.
Mr. McFadden? I do not have any questions. Mr. Marks?
No questions from me. Thank you.
Mr. Reimer, did you happen to inspect this property?
I've been in this property, but not recently for the purposes of the hearing. But yes, I have been in the units in the past.
Can you speak to the condition?
It's in it's in reasonable condition for its age. It's a 1967 building. Actually, I mean, for a building of that vintage, it's been reasonably maintained. Not certainly. It's not been upgraded in any substantial sense. So I'd suggest for a building this vintage, it's an average quality. And for the board's reference, with our selection of the cap rate at 7.3, the age is one factor, but also again the low land to building ratio at 2.29. So suggest that the condition is average, not below average, but average for this 1967 vintage building, and that the 7.3 rate reflects the older age and the lower land to building ratio.
All right, thank you. Do either of you have a wish for a summation on this property?
No, thank you.
All right. We have heard all the items on the docket this morning, and this hearing is adjourned. And I would like to thank you, Mr. Reimer and Mr. Ducharme, for your really terrific briefs this morning. Thank you. I appreciate your efforts and patience.
Thank you very much. Have a good day.
You as well.
Good.